Hey guys, good evening. It's Dan. It's almost 8 o'clock here on the West Coast. So, today was brutal day. I'm sorry I did not do Rate Watch Live. I really am sorry. Because I know there's a lot of angst, and I don't know that I can necessarily make it go away. What I can tell you is this will get better. I have zero doubt about that. And so then the magic question becomes when. So I went back, I did post this earlier on Facebook. I went back and I looked at the 2000 and, kind of 7 to 2008, 9 type crash. And you can see the crash really started here, kind of started coming down about here. And as so the candles are the treasury and this blue line is the stock market, the S&P. So, as the stocks fell, bonds rose, which is supposed to happen. And then they kind of decoupled a little bit, just for a little bit. And then again, bonds rose, stocks fell as they're supposed to. And then as the bonds started coming down because stocks came up, again, everything perfect. Then came about April of 08. And all of a sudden, things got weird because the stock market fell from that period was, oh, this isn't going to give me a number, is it? The stock market fell and bonds fell together. That's not normal. When the stock market falls, bond prices rise. And that went on for a period of, call it April 8th-ish. Yeah, I think about April 8th. And then they decoupled June. So that was about a 2-month period. That's it. And then they actually rose together for a bit, but we don't care about that as long as this was going up. So I guess looking at history, I'm thinking 2 months, and I know it seems like a really long time, but it's not in the scheme of life. It's just a matter of communicating with your borrowers, maybe daily videos, pass on my video, whatever you need to do just to stay in touch with people. But it's not going to be a long time, and I don't even think it's going to be 2 months. I really don't. The MBS was just ridiculous today. If we fast forward to today. Where am I? There I am. So bonds didn't do that poorly. If you look here, the 10-year actually was up almost 1%. It did okay. And here's what's really key. So we've talked about Fibonacci over and over. This red line here is the first level of retracement for Fibonacci. That's 23.6%. So that means it rose to here, and it's fallen 23.6. And look at how perfectly it's held on the Fibonacci line, 1, 2, 3 times. So I said that we needed to stay above the fib line, and we needed to ride this trend line up. And both of those things happened. So that's really good news. The MBS, however, I also said we needed to stay above. I think I might have a PowerPoint here to pull up. I said we needed to break out of this downward trend line, or we'd get into trouble. And we'd get into trouble if we broke through here. Boy, did it break. It broke hard. Again, no good reason other than investors are just heading for the hills. Anything with risk is bad. And treasuries are not perceived to have risk because they're backed by Uncle Sam. Even gold, I think gold did better today. But when it gets this bad, investors just get your money out and hide out. And I'll tell you, it's a good idea in the stock market still. So I think we're going to see a bounce back. I'll be surprised if we don't see a bounce back tomorrow on the MBS. I really will, especially because as I'm speaking right now, the stock futures are down 500 points. It's looking like another bloodbath in the stock market tomorrow. And that would mean, oh, and by the way, the overnight markets, the DAX, the FTSE, the Nikkei, all the international markets crushed. So it's not going to be pretty tomorrow, I don't think, for stocks. We care about bonds. So I really think that you're going to see a bounce. Today, just this little hope of green here, this little tiny green line, told us that the bulls kind of stepped in. So, bullish, 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 bullish. You can see how these green lines got bigger, price got better. And then as it tapered off, these lines went to red. Now they're blue. I still have a sell signal here. That's on the day chart. I believe on the 4-hour chart. Let's try the 2-hour chart. One of these charts went green for us, which means we closed pretty well. There we go. So this is a 2-hour chart. So each one of these bars is 2 hours long. So we got a buy signal, and it held that for you know, these 4 bars. I think it's a good sign for what's to come tomorrow. So, you know, hang in there, don't freak out, and I just think we're going to be fine. By the way, I'm vested with you guys. You know, I own this processing company, and we just got buried in business, and we hired like crazy, and we got this all this work. All these processors have done all this work, and a lot of loan officers didn't lock just because they didn't, or maybe they didn't have time. Whatever the reason, no hard feelings here. But we potentially also have a pipeline that's not going to be worth much after we processed it. I'm not worried because I believe these rates will come down. I just need you guys to stay on top of your borrowers. Don't let them slip away. I think that's it. So hang in there, be positive, and I'll catch you tomorrow. Have a good night. Bye.